Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach, and today we have with us Judy Carlson, who's a fee-based fiduciary financial professional, and we'll be talking about how she protects families financially. Judy, welcome to the program.
Thanks, Mike.
Hey, so obviously we always need to have protection in a lot of areas, insurance and financial and physical and all of these things, but you are focusing on helping families be protected financially. So I'm excited to talk to you about that. I know you've got some great comprehensive takes on that. But before we dive in, get us a little bit of background on your entrepreneurial journey and what led you into the financial industry back when you started.
Wonderful. Well, I love my early years story. So I was in 11th grade in high school, and I asked my dad, "Hey, Dad, what do you think I should be when I grow up?" And he called me Jude. So he's like, "Jude," he said, "people are going to need accounting people and computer people." And I said, "Wonderful. I think I'll try accounting people." So interestingly enough, my high school offered an accounting class. So I took that my senior year, and it was just a blast. I loved the way that it was laid out, and I was in the accelerated program and actually got to accomplish 3 times more than most of the students in the class. And through that, I met a woman who owned a small accounting firm in my community, and she hired me right out of high school to work part-time in the summer for $2.10 an hour.
Oh, boy. You're dating yourself now. We won't get into
it. Exactly. But she gave me clients to work on. They had a computer center on the 2nd floor, so I would take all of my information up there, and I learned how to key punch on the old IBM computers and run trial balances and reports. And from there, went on to the University of Minnesota and got my accounting degree, my Bachelor of Business in Accounting. I was president of Beta Alpha Psi and launched my career in one of the big 8 CPA firms in Minneapolis. And that launched me into my financial career.
Yeah.
So typical of people who oftentimes start in big CPA firms, they get hired away by a client, which happened to me. That happened to be in the healthcare industry. And then was hired away again into the retail industry. So I spent most of my career in retail and healthcare and education.
Yeah. It's interesting, number one, when you mentioned the person you met, so many times today, 10 years ago, it doesn't matter. We get breaks and opportunities through people we know and our networking. I mean, it's just, we have to keep our eyes open and we have to be watching for opportunities. And your dad could have given you some advice and you've been, okay, yeah, that's fine. Or you might have known this lady, okay, whatever. But you paused and stopped long enough to smell the roses to go, okay, I'm going to take that advice, or I'm going to follow up on that idea to meet with this person to see about working there. And you may have worked there and hated it and moved on back into computers like your dad mentioned. So I think networking is so important. And at some point, you moved from kind of quote unquote, air quotes, numbers into helping your clients plan for, the future financial retirement years. So how did that come about?
That's a great question. So for about the first 30 years in my career, I was in corporate planning in all of those large companies. And then about 10 years ago, I transitioned from corporate planning to personal planning.
Do you find similarities between the two? Because sometimes when I talk to, let's say, business coaches that came out of corporate, they'll take the same concepts and techniques and go, wow, this worked when I worked at McKinsey and we implemented this and this and this. And now I'm bringing the big corporate mindset into working with small business and it works great. So do you find that the corporate approach to wealth and numbers and money applies to the individual? It's just that now you can bring kind of a broader approach to them?
Absolutely. That corporate experience for me is absolutely invaluable and definitely brings So I work with a lot of business owners, and I've been in business, and I've gone up the corporate ladder, and my budget at the retail company, I was the director of expense planning, and my budget, Mike, was $1 billion.
Wow.
So I was down in the details. My financial analysts were looking at the details of every facet of the company. So from the big perspective to the small perspective, I can help business owners today take a look at, from a business perspective, what is that going to look like for the rest of your life on a personal basis.
Okay, so let me give an observation based on what you just said there. Oh, well, Judy's used to working with such large companies. She's out of touch with me. I just have a smaller business, and she managed $1 billion. So while she can't relate to my budget of X, but when you say that you were trained and it was ingrained in you for them to watch the penny, so to speak, for that $1 million budget or $1 billion budget, it doesn't matter whether it's $1 million, $1 billion, or $10 billion. Because if you let a little bit of leakage come out at the bottom of that, budget, all of a sudden it amplifies, and now you're out of control. So for you to say that they were really on it for those small details, that is how you do it. And now when you bring that mindset to a smaller business, there's a definition of small business. Is it, one person, or is it, 50 employees? But the point is, it's probably is not $1 billion budget, but you never let yourself feel like, oh, we'll just blow this because we got plenty of money. Every dime counts.
It does. And especially when we do projections, lifetime expense projections, the closer a person can dial in what their expenses are, because, of course, over the next 30 years, say, of retirement, those costs are going to inflate. And if we don't have good estimates today, we can easily show them running out of money, for instance, at age 82, and maybe they're projected to live to 90. So that dialing in of the numbers that we did for all of those departments around the entire company was so important. And when I presented numbers to the senior management group once a month, I had to rely on the fact that what we had done was absolutely the truth.
Yes. Yep, you can't sandbag, as they say. I remember that phrase from being in corporate America. So now when you work with individuals and business owners, guiding them through the accumulation years of planning for retirement and wealth building, and then the decumulation of now distribution and legacy and wealth transfer, it seems to me like there's more than one or two solutions or ideas or mindsets. There's about one or two quadrillion, right? Everyone's got their own opinion, and it's confusing. And when the mind sees confusion, it shuts down, and then there's just chaos. Why do you feel like there's so much chaos and confusion with business owners or individuals talking about their retirement?
It's very interesting. Probably our parents and the generations before us, retirement didn't seem to be like such a chaotic, confusing time in our lives, simply because they lived 90% of their retirement income came from guaranteed, predictable monthly paychecks coming from a pension and Social Security. Then they had some of their own personal savings that they could use for what we might call, say, play checks, which is vacations and travel and seeing the grandkids. Well, that completely was transformed in the 80s when the 401k plan was signed into the tax code. And now the burden shifted from companies to us on our shoulders. Now we're responsible for planning our retirement, and that guaranteed, predictable, dependable check might just be from Social Security, which is maybe 30% of what we might need to live on in retirement. So that leaves us responsible for the other 70%. And now people are saying, well, how much do I need? And am I going to run out of money? And what happens if the market goes down like in the early 2000s and they could lose half their nest egg in 5 years? Or, inflation is huge right now. What if that continues at the rate that it is? And what about taxes? For heaven's sakes, all my money now is sitting in a tax-deferred plan, and I don't have any idea how much of that the government is going to take once I start making the distributions. So those are the kinds of questions that are surfacing and coming up, and they're all great questions, but they're all arising because now they just don't know. And it's not their fault. It's just that they don't know because of the way that they're saving for retirement today.
It really does get into like that conditioning mindset of, well, that's just the way we've always done it. And in corporate America, that's kind of what you dealt with, right? So, now I know that you formulated your own strategies and concepts and brought both your number CPA type background into working with financial services and wealth building. So talk a little bit about what's happened in the markets in the last decade or two, and where we stand here now at the time of this recording in 2022, because if you look at those 2 decades, 20 years, that's indicative of market movement. And is that going to continue? Is that something that people need to go, okay, well, here now is a nice trend, not 2 years, but 22 years?
Exactly. So from 2000 to 2009, those 10 years are called the lost decade. Say you had $1 million in 2000, the market went up and down and up and down, and in 2009 you still had your $1 million. So it didn't grow, and you lost a lot of opportunity to earn on money because it didn't grow. Then from 2010 to 2022, we had 12 of some of the best years that we've ever had in the market. And so your money, if you had $1 million in 2009, you could have $5 million at the end of 2022. And then, of course, at the end of 2021, and then, of course, 2022 starts, and we've got, lots of market volatility and craziness, and people are sitting on the edge of their seats wondering, what's going to happen to my money. A lot of the people I talk to say, I'm just not looking at my statements because I just don't want to know.
Yeah, well, that's not, it makes you feel a tad bit better, but then it doesn't, because you need to know.
You need to know. And what I have learned in the last 10 years, and I'd like to share a little bit about that transition that took place in my life 10 years ago, but I landed in a very healthy, holistic place to learn a lot of unique and innovative strategies that I'm helping pass on to my clients today that literally protects the downside risk of their money, whether they want to be an investor for the rest of their lives and be in market-based investments, or they like the insurance side of the financial services industry and all of the different strategies that can come from that side of the business. So there are actually accounts, and you're in the market, they're investment accounts, but there's no downside risk. Another word for it is to put a floor under your money. So when the market goes down, it can't go below the floor. It gets stuck, and then when the market goes back up, you capture the upside growth. Now, that's a unique and innovative investment account that's just not very well known today across America. And because of my affiliation with my registered investment advisor, I have access to that particular set of investment accounts. And it's a wonderful strategy to share with people. My clients, I've been meeting with them now that they've moved a lot of their money into these strategies, and when everybody else's money is going down, theirs is staying flat. So I have ear-to-ear smiles with my clients.
And they can look at their statements once again.
Right. Yeah, exactly.
Yeah. It's kind of like that could be one of your taglines or one of your opening remarks to people is like, are you tired of not opening your investment account statements? Well, worry no more, because now you can freely open your account statements and breathe a sigh of relief and realize that you didn't have, all of that. But yeah, I think that a lot of personal development business coaches will say people are more motivated with the fear of loss than the fear of gain. So I think that if you were to say, oh, hey, that portfolio that you have of X number of dollars, I can show you how to get X % gain. And people would be like, oh, that's nice. But if you said, well, on a scale of 1 to 10, rate what it would feel like if this dropped a massive amount, it would just freak people out, because they're more motivated with, I don't want to lose. Now, yes, I want to gain, but boy, first things first, help me not to lose. And I think with that floor opportunity and concept strategy, that really solves a whole lot for people.
It really does. Yeah, I've got some clients who I have a way to look at their statements on an ongoing basis because I have an analysis program that I can feed their information into, so I can take a peek at what's happening in their accounts. And when I see $200,000, $300,000, $400,000 of losses, it's startling to me, and I don't even own the money.
Yep. Yeah. And you're sitting on the outside going, I couldn't help that the premier of Greece combed his hair on the left-hand side today, and that caused the whole market. I mean, it just seems like it doesn't take much to make the financial markets hiccup and move, and it's like that butterfly effect. So when you think about the average person planning for retirement, what can they do to be protecting themselves from these kind of losses? Because maybe someone is thinking, well, that sounds fine and good, Judy, with that floor and that protection, but I guess you need to have a portfolio that's just stratospherically through the roof. But can the average person take advantage of this too?
Exactly. So a minimum amount that for that particular strategy is $50,000.
That's normal.
Yeah, I would think that's pretty normal. Yes.
I mean, a lot of people might go, well, I don't have that in my checking account right now. But the point is, let's talk about your retirement account. You just retired, or you're rolling 401k into something. So 50 is a normal thing. A lot of times you hear of what's the number for being an accredited investor? What's that figure? Yeah,
there's a couple of different ones, but $1 million.
It's way more than 50,000. Yeah.
Oh yeah, $1 million in net worth.
That's what I was thinking. Is sometimes people go, oh, well, that strategy sounds so great. Thanks for getting my hopes up, but I don't have $1 million or $2 million or $5 million. But 50,000, okay, I can keep talking. So that's really encouraging.
It's very encouraging, and it's accessible, it's liquid, and you capture the growth and not the downside risk. So literally, you're protected from your money going down. And we all know how hard it is to earn money in the first place. And then, within 5 years of retirement, we call it the red zone, the 5 years before and the 5 years after. Those are very critical years, especially to protect the downside risk of your money.
Well, Judy, I think that let's wrap up with this. What's a final thought, and what's the best way someone hearing this could go, well, look, maybe you can tell me a little bit more about that, protecting myself from the downside risk. What's the best way that someone can learn more and then reach out and connect with you?
My website is a great place to start. That's judycarlson.com. I'm offering master classes regularly throughout the years, and they're always on different topics, all about protecting the downside risk, whether it has to do with investment accounts or taxes or insurance side strategies. So that's another great way. I have judycarlson.com/schedule. You're welcome to schedule an introductory call on my calendar. So lots of different ways to reach out to me, and I have a full team of professionals behind me in all facets of my business. So we're a very strong team moving forward together to help you protect your families financially.
Excellent. Well, Judy, thanks so much for coming on today. It was a real pleasure talking with you.
Thanks, Mike. I enjoyed it.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.